else you think our readers need to know about you or the way you work or the way your bank works or really anything that we haven't discussed already?
I'll just tell you, my one of my passions is to encourage other bankers across the nation to form banks. I really think there's an advantage that community banks have and continue to have. We're not dinosaurs, we're not extinct. What has changed going through two banks now and talking to other individuals who have started banks is you have to create a niche that is relevant in your marketplace, that matches up with your skill set. And I've had the pleasure of being approached by quite a few individuals across the nation who have reached out to me and said, I want to start a bank. Can I get advice from you on what you learned? What would you do different? And I share that with great passion. And I've seen many go on to start banks. A few have actually tried to copy our homework almost down to the letter. That's the greatest compliment. They're in different markets, so I'm rooting for them to be successful. But I would just love to see more people get the passion to start a bank, and hopefully it'll create a new generation of banking entrepreneurs that is greatly needed as we go forward. You know, one thing that is I don't want to say unique, but is a little different even now when I talk to banking entrepreneurs. Once you go through the process and you get your conditional approval to open the bank, the toughest next step is raising capital. And you're given only a year to do that by the FDIC. And what almost always happens is people default to big checks. And the big checks were like $1 million, 12 people, 20 people to write the checks. And what they don't think through, that does get your doors open. You are in business, that's great. But you are trapped because those individuals want a liquidity event. And usually at about year 12, year 20, they come knocking. Hey, let's sell the bank. And therefore, you don't have the lasting legacy of community banks. The ones that are out there now that are going 50, 100 years were started in a different time frame. You're not seeing new banks doing that. And so what I try to encourage them to do is think a little bit longer. And if you do it the way we did, and you can't do it after you open the bank, you got to do it as part of your formation. By having a group of individuals that have a stake in your bank, there's a good chance, at least the way we did it, that they will be your primary engine of growth. We have 600 people not on my payroll that are driving business to me that are business owners. Like fish in the ocean, they swim in schools of peers. And they say, hey, come bank with my bank. They say, oh, you mean where you bank? They say, no, my bank, I own it. That's how they view it. So I have 600 business owners who are my best salespeople. More importantly, we gave them an opportunity to sell their shares if and when they want to without selling the institution. So anybody can have a liquidity event as an individual without coming to me and saying, Dan, let's sell the bank. And we do that through the OTCQX where we have our stock traded. So I just encourage people to think about how they capitalize their bank, both to help them grow it and to think about where they want to be 20 years down the road when people start thinking about liquidity events. So if you do it as a forethought to structure, you can actually set yourself up to have a legacy play and build a great bank and hand it off to another generation of bankers and keep that legacy going. That's what we hope to do.